two, one.
Hello, Warriors. Dale Pinkert here at TradeGate Hub, and today's guest is Tom, Tom the Trader. You could find him on Twitter. Tom, great to meet you. Appreciate you taking time out of the S&P's making new recovery highs here today.
Good morning, Dale. Thanks so much for having me.
Yeah, and the parabolic nature of what's happening here after the Fed. Before we get to the markets, it's always interesting to my viewers, and I'll admit it, to me, how people ended up in the industry and how it happened and how the road, God bless the broken road that led you right to where you are right now. When was it, or what were you doing, say, when you're in your late teens, going to college, or early 20s? What were you doing with your time?
Yeah, no, that's a great question. It's always it is interesting. I agree, to discover how you end up finding yourself in the markets. I think initially so many of us show up passively. I think many of us are participants without even knowing it to an extent. But my story really, I formerly trained as an engineer, so that's where I spent most of my time in the Canadian oil field. So I've spent most of my time really living that energy world and market.
Okay.
As I was thrilled to kind of progress, I had some leadership engagements that ended up getting me into some C-suite conversations for breakfasts and dinners and that. And I always found it interesting. Despite having a business agenda, we would always open up starting about stocks. And I recall my colleagues being able to, quote the price of WTI and a couple of their energy peers as if they were just swap pricing it without looking at their phones. And I'm like, man, there's something here. There's another opportunity to potentially grow wealth. And that was really it. So, I was a passive investor for quite some time. And then when I recognized that, you could use this as a vehicle to potentially propel your financial position in life, I might as well try and learn it. Plus, naturally, at that time, whenever you pulled up an iPhone or you looked at stocks, the first thing you ended up seeing was the chart. And living a life of charts through university and even my early career, it just seemed like a natural way to participate in the market. I didn't think I'd find myself as interested as, diving into the fundamentals and the PE ratios and the valuations. That's not my game. So I'll share that with full disclosure. While I may be interested in it, it's certainly not something that I can speak to with any degree of confidence.
You said a couple of very interesting things to me. You talk about the guys who knew the last price of WTI. And I've been told by certain traders that were, quote unquote wizards, that if you can't call or say the last in every instrument you trade, you're trading too many. Okay, so these guys knew WTI, they knew oil like the back of their hands. And the second thing is engineering background, proclivity to charting and geometry and patterns and formations. My younger days as a broker, you guys were always my best prospects, engineers. Love to talk to an engineer because I could, talk about wedges and, things I was seeing technically, and they gravitated towards it. So, kind of reinforces what I have lived through. So, what did you do when you decided it was time to trade? Did you leave the engineering field and get into a trading mode, or did you just become self-taught and started to trade?
So I didn't want to leave the engineering world or energy world for that matter. It was my primary source of income, and really coming out of school, I was in a position where I needed to actually grow a meaningful amount of capital to make the gains, and it was actually quite a nice result. It allowed me to kind of experiment in the market without really being capable of blowing up. I was being,
have you ever
well paid. I've blown up small accounts, yes, but I've never blown up the full portfolio.
Okay. All right. So, no, I haven't talked to anyone that hasn't had that experience. Fortunately, you were playing small ball then.
Yeah. So, I was able to replenish a portfolio, with every 2 weeks to an extent. But then you get to a point where it's sizable. You've saved up enough, you've passively invested, and mean, fortunately, I mean, I enjoyed the year bull market, passively investing a good portion of my income. And I ended up wanting to kind of pivot and take a little bit of control myself. So I dabbled with posting some thoughts here and there on Twitter, and kind of getting myself into the realms of what the internet offered in terms of stock picks and ideas versus just what my broker had. And yeah, from then on, it really kind of, once I became confident in it and recognized that I could manage not only risk but manage my ideas consistently over time, it was worth taking a shot on some of my own ideas. And I write this to all of my subscribers that my Substack. I mean, you're following me long enough, and you're going to see me be right, but you're also most certainly going to see me be wrong. And it's way closer to a 50-50 game than most think. It's just managing risk between that win and that loss.
Okay. So is that pretty much your hit rate? Is that what you shoot for?
I'd say a little bit above 50, maybe 52 on average between all the trades.
So you're a technician. Did you have any influences, any books or people that helped you, make breakthroughs and create a paradigm where you could make a living off the market?
I think there was a point in my, I guess, call it charting career, if that's what we're going to give it the name. There is.
Okay, it is.
It is. I think you get influenced by multiple factors along the way and shape it into your own. The one thing I love sharing, but really don't practice so much anymore, is I did spend a meaningful amount of time studying Elliott wave theory.
Okay.
I don't love it so much today, just because there's so much of a, I think more so a subjective perspective to the chart than you would traditionally see with a little bit more black and white technical analysis. But what stood out to me with learning that was being able to recognize participant sentiment. It was so clear to me that as prices advanced in the stages that they had advanced through, participant sentiment would go with that. So I do often look at whether the market is operating in a state of euphoria or in a state of fear, using traditional, easy to grab, indicators, and then ones that I've also worked on creating myself a little bit.
Okay, so you have some proprietary stuff that you use in your trading. So let me ask you this: you talk about fear and greed, and I think I went through your Twitter feed, and I recognized how fortunate I was to reach out to you, because you don't do that much on Twitter. You don't post a lot on Twitter. Did I just hit it during a slow period, or am I right about that?
No, you're right. So I scaled back Twitter significantly. I would say early this year, but it was primarily to switch the platform from being one of conversation where I would engage into a platform where I would share my thoughts in a more constructive and consistent way. So I typically only post on Sundays. You may catch me on a Wednesday. Okay. I do lurk on Friday, just update with what's going on, but typically my thoughts are on Sunday, and I've found that pace of sharing updates and ideas resonates with a large audience. I mean, there is a large grouping of participants that are away from the screen Monday through Friday and get there on Sunday and just kind of think how they position their portfolios that week.
Okay, we're having a little audio and video. Maybe we should just maybe turn off the video and see if that helps. So getting a little bit of.
Sure, let me.
Okay, the internet. It sounds like it's the internet connection. Let me hear you say something now.
Can you hear me now?
Yeah, loud and clear. All right, so
Super.
All right, so why don't we get to covering the markets here? And
sure.
A couple of things that I noticed is that you think that we're in a euphoria state. You use the CNN greedometer, and we're in excessive greed. And is that enough of a reason for you to start, I don't know, would I say stalking shorts in the market?
It's a dangerous approach potentially. It's not one that I would take with size. I think if you look at NVIDIA as an example of what can happen in euphoria and how fast it can happen, it's easy to get lost in it as well. to get caught up in the actual movement of the market. But euphoria is not the right way, I think, to describe the current market. We just passed, I believe, Tuesday was 7 straight weeks of extreme greed if you use that CNN Fear and Greed Index. We haven't been that greedy since 2019, preceding the COVID pandemic. And actually, this moment of extreme greed doesn't exactly correlate with the peak of an S&P 500 that typically happens a little bit thereafter. But the current state that we're in, there's no doubt in my mind. I'll be clear on two things. One, I don't think we're in a bear market anymore, and I've shared that in July. But that didn't pivot me initially into a bullish position. I think that this euphoria needs to absolutely humble a little bit of the late longs, and position the market into, I don't necessarily feel fully neutral, but we can't operate in this greed market environment for much longer. It's been 7 weeks. We'll probably be going on to 8, 9. I can't personally see it lasting much longer, but I'm not ready to take a short here, just at the rate and pace that the market is going up. I mean, the S&P was over 4,600 this morning.
Yeah, I know some people, they have like 4620 as a number. One development, and I don't know if it's going to last, but you've had 2 successive recovery highs in the S&Ps without the NASDAQ. So, a lot of people are saying, well, it's healthy, it's rotation. I go, well, you know what? If what got you there is starting to falter, that it's more than rotation, and rotation isn't necessarily bullish. What do you say to that?
So one of the things I tracked, and I think I actively shared throughout this year, and frankly, it's what kept me bearish for as long as it did, was I look at net new highs. So it's my preferred measure of breadth. So the number of stocks that are making new highs across the New York Stock Exchange and NASDAQ, subtract the number of new lows that are being made across both markets. And when that number is positive, you can kind of make the general statement that the internals of the market are moving up. And when it's negative, they're moving down. And really all the way up until June, actually like May 28th, we were most consistently negative. And despite creeping up, once that breakout occurred through June and into what we've seen here in July, net new highs have become positive. But
yeah, it happened near the tail end.
Yeah, and they've stayed there now for really that almost 8 week mark. It's hard to argue. It's something to watch for, and I am watching it weekly just because I am anticipating a bit of a correction. And I do think that once we see those net new highs turn, or if they do turn, that will be a sign of a moment to take a bit of a pause and a bit of a breath here. But yeah.
Do you follow any outside markets with your analysis? Does a dollar matter to you? Do 10-year yields matter to you? Or is it strictly what you see in front of you and a chart? Like I know you're talking SNAP on your stream, that each chart is its own individual entity, and it's nice to know correlations, but correlations, they at times they disconnect and can get you in trouble because something's out of line. For example, the dollar and gold are pretty much in lockstep. So the dollar has recovered, and a lot of people, silver squeeze people and gold bugs were looking for a breakout in the metals, and they are disappointed. And I think they continue to be disappointed maybe for another month or so. I think there's a great buying opportunity coming, but I still think gold could see 1800. And the dollar's strong. So the market doesn't care about a strong dollar. They used to call it a wrecking ball, Tom.
Yes.
So has the wrecking ball lost its, especially if this is an important low? I know that, first of all, you didn't answer the question. Do you follow the dollar at all in your analysis? Does it mean anything to you?
I do, but not in the traditional way from a trading perspective. So being a Canadian resident, I primarily utilize it as an opportunity to transition between Canadian and US dollar. So there's a slight trade that occurs there.
Canada looks great. Canada looks like it's bottoming too.
There's a potential. We'll see. It's always a conversation in our world.
Holding up great with stronger oil and risk on.
Yes, there's no denying the improved crude prices are great for the Canadian economy.
Yeah. Okay. All right. So you brought a few charts, from your Substack, and
Yeah.
when people want to. So I'm going to stop sharing and stop talking. I'm called the interrupter, Tom. So appreciate your patience with me, but you could go ahead and share what you're looking at right now when it comes to the market, and maybe we could even cover SNAP, because you showed a breakout in SNAP and it was holding a breakout. Is it accelerating to the upside with the market now?
Sure. Let's why don't I actually just start with just the S&P 500 just to provide some perspective. Let me look across.
Okay. So it's the share screen button. There it comes. Okay. So what is point of control to you?
It's so the chart that I've got up here is of the S&P 500.
Right.
And as I consider, where the market may potentially correct towards, I use very simple analysis of visual resistance and support. And then I also consider a volume profile, which is on the right-hand side of the chart.
Okay.
What I've seen here with, first of all, so I'll highlight the red lines. You can visualize a visible pivot that was historically resistance through May, early 2023, and then just before the breakout. I mean, you could argue that that was the launch pad at the end of May that propelled the market forward.
About 4,200's the line, right?
Yeah, we got that sitting almost exactly 4180, 4200.
Okay. Okay.
And what you'll notice is on the right-hand side, there's these two nodes. There's one that sits at 4130, and then another one here that sits at 3950. There are peaks in that volume profile. And the way I like to think about it is
interesting
areas of actively traded price. With that comes emotion from the fund managers that were purchasing the stock. It comes from the retail participants that were involved in the stock, and it comes from passive flows as well. So there's price memory there. And
to the left,
price retrace. Yeah.
Traders need to learn to look left. I'm a lefty.
Exactly. And when price potentially, fades down towards those two targets, you would anticipate support where previously it was resistance. So it's a very simple concept. I mean, in a really strong case, like say this market is going to progress towards the melt up scenarios that some are arguing.
Yeah. Yes.
I don't think it actually progresses as deep as 3950. It would probably be most probable that it stays above 4200 on a correction and then just moves up from there. That's still a meaningful decline from where we are today. And a lot of late participants would likely find themselves quickly humbled.
Okay.
I'm just going to share my.
Is that also
over to a different one here real quick?
Okay. Is that also a bull bear line? If we ever close back under that line, would you suspect the continuation of a bull market if we negated the breakout?
If we went below that 4200?
Yeah.
I think I have comfort to still sustain kind of a bullish outlook all the way until the 3950 mark. If we teeter below there, it would be meaningful for me to consider, potentially something else considering, and that would be a bit frustrating personally, just because it would whipsaw me a little bit both ways and keep me out of the market longer than I'd like. But that's a part of. But
Mr. Markets, he's a pretty mean guy. What I've noticed, including myself, is that markets will shake out as many participants as possible before the move they're looking for happens, and then most likely without them. Isn't he a mean guy? Tom?
You've got a good description of him. I don't know if mean's the right word, but it's always great to be humbled every now and then.
Yeah. So did you want to show another chart? You stopped sharing? That's it?
Yeah, I can I can showcase one other chart that I had opened, and it's from my Substack if that's good too.
Is it SNAP? Okay. All right. The fear and greed.
Are you still able to hear me there?
Yeah. Yeah. Got you.
Perfect.
Everything's cool.
So what I wanted to showcase on this piece is, so this is the Substack, and this is a chart that I've kind of showcased multiple times throughout the year. And then we'll finish off with Snapchat.
Okay.
So on this graph here, the S&P 500, I've shared this through my Substack, linesandachart.substack.com. There's two relative arrows. There's the CNN Fear and Greed Index, and there's the Name Exposure Index, which to a degree showcases the positioning of fund managers. And I found it interesting that since the 2020 peak, pairing that elevated exposure with a market operating in a state of greed has preceded the, really most of the meaningful declines. Even on the way up from the October lows, if we got a little bit too greedy, we found ourselves correcting.
Yes.
The current state that we're in is the most bullish exposure we've had since that peak in 2022.
Yeah.
And we're also the greediest we've ever been. And I mean,
yeah,
we all find ourselves getting that Warren Buffett quote of, you want to be buying fear and selling greed. And right now, I think participants are buying greed. And I just can't get that point lost on me. It's one of the reasons I perhaps it'll keep me out of the market longer. In hindsight will be 2020, but for now, this is a leading piece for me to keep out of the market.
Okay. Return of investment rather than on.
Yes.
Okay, and record extreme readings that we haven't seen since can you go back in the time and reference like to the .com bubble to see where it was at up there, or prior to the GFC? Are these all-time record readings in those two?
So I can't go back that far. So the CNN Fear and Greed Index gets lost. You have to actually utilize the Wayback Machine if you really want to use that single piece of data.
All right.
So I mean, for me, the most relevant point that I have, and perhaps it's not the most piece, but I tend to believe the most recent 10, 15 years is what's most valuable. The market, or the pace of the market, has changed so much with the advent of technology, Twitter and social media, that I do think that we operate at a different pace today, and that pace is captured in that 10, 15-year block.
Do you still think there are stop hunts, even though we don't have open outcry, that the algos go to, a lot of people trade with stops just above a swing high or swing low, market picks them off and then turns?
So I got to believe there's some kind of magic like that going on.
Yeah. I still think
I feel
so.
like, I mean, it's easy money for someone with a significant amount of liquidity to just go look. For the retail participant, you can't function that way, but for a huge fund, that's an easy way to collect a couple pennies.
Okay, because there actually used to be a roar on the floor when we ran stops, and when I was a runner, brokers were very interested with any orders that had STP at the end of it, held it in a different hand, in fact. So they knew where they were, and they end up being liquidity at time for those traders to liquidate, sell into buy stops, and sometimes, reverse into sell stops. So I still think it happens out there. So Tom, is there any way you're looking to possibly take advantage of this correction? And what would you use? If you do, would you use futures? Would you use ETFs? Or do you just sit back and be patient and wait for the pullback to get long?
Yeah, so I mean, what I've really done is, despite having a bearish outlook from really August of last year, but more predominantly from January through July of right now, which hasn't been correct, I have curated a bit of a watch list for myself of stocks of names that I'd be interested in taking a long position in. So I've shared two of those. One of them was Snapchat, and yesterday, following the earnings decline, I was fortunate to get my third of my position opened on that one, and the other one is Unity Software. So my approach here is, if the indices do pull back, and those magnificent 7 leaders that have carried the market so well through 2023, take a moment to pause and breathe. In a healthy scenario, I anticipate, or at least visualize, that money flowing into smaller cap into segments of the industry.
So in the next rally, the leadership won't be the Elite 8. The leadership.
I don't think I can say with a certainty, but it's certainly something that I'm not expecting. I would expect
Okay.
that to take a pause. Like if we take a look at the way Amazon and the way Apple had looked at their peaks, they do trade sideways once they get there, and it takes
Yeah.
time to digest these moves.
Okay.
And I look towards those higher growth names that peaked, well before the S&P 500 and NASDAQ, and they've now been, in some cases, some are still 70-80% off their all-time highs, and they've just been going sideways for the last, 12 to 16 months or potentially longer. I think there's an opportunity to see some of those names come up and curl up. Doesn't mean they're going to go to all-time highs, but I
No.
think there's an opportunity to catch a bit of an outsized trade there.
Okay. So we'll go to some of the low floaters. Or
Yes, potentially.
yeah. Okay. Leader. So the opportunities are going to be in stocks that have been basing for so long during this explosion in mega cap. Do you look at oil shares or miners or any other sectors within the market, or are you mainly S&P and tech? Sounds like mainly tech.
Mainly the S&P and mainly the tech. I do,
Okay.
as a general rule of thumb, I do follow the energy market, but I don't position in it.
Okay. Do you think Nvidia is going to make a new high here, Tom?
Oh, the easiest answer is yes, at the rate that things are going.
Okay.
But my goodness, what a euphoric ride up. And I imagine that, in a couple months' time, somebody will be sharing a great conversation about the euphoric way down, and that it just didn't make sense at where it was.
Going to fill
What a
that
great
gap.
example of how.
Yeah. Going to fill the gap underneath. A lot of gaps underneath these huge mega cap stocks. And why can't some of these others do what Microsoft has done? I think the top
really, when
sin
it
in
comes to
Microsoft.
NVIDIA,
Yeah.
when it comes to NVIDIA, it's only going to be the late participants that get quickly fixed. It's moved up long enough where early participants in NVIDIA's recovery will certainly be able to find a way of enjoying some profit.
Okay. So I use some momentum indicators, and we've been diverging on not just the daily, but even some intraday, like the 4-hour. Maybe it's going to blow it out here. Now, even at new highs, NVIDIA is not going to confirm. We've been diverging since the earnings report. This was the peak momentum. Do you do anything
Yes.
with momentum, or should I give up on it?
No, I certainly consider it. It's just not really something that I've been able to utilize well or find a way to mix into my strategy.
Okay.
I do measure distance away from moving averages as a to an extent. You could look at that as momentum. The further away it moves, clearly it's something had caused it to move that far away in a short period of time. So I do think it's important, but simple moving averages are really, for me. I see you've got the 50 and the 200, both of which I care about. And I also include the 20.
AMD sitting on a shelf like Wile E. Coyote. Looks like it could be vulnerable, not doing that well with tailwinds in semis. What's going to happen if we correct? All right. Well, Tom, really a pleasure meeting you. And I hope you're right that we're getting close. Do you think could you have imagined 6 months ago, and we're not at new highs, 12 handle VIX?
No, that was not in my 2023 bingo card.
So are we priced for perfection here? I mean, people have been making a fortune selling vol for, even through 2021, they made money selling vol during a declining market. Is there ever going to be a day the steamroller goes after those shorting vol guys?
A new a VIX chart has been starting to make its popular rounds across Twitter as of late, kind of showcasing that the seasonality of the VIX, if it has one, from here on out is up, right?
Okay.
Just on a month-over-month basis. And so I do think the short vol idea kind of gets put to rest, at least for the back half of the year.
Okay.
That's another way to shake participants out. And it's another way to get euphoria to leave. It doesn't need to fully be that corrective decline all the way to 39.50 or 4100 like I hope for. It could just be a consistent market of chop. People forget January through the end of May, so I don't include the breakout. That was frustrating for participants to just to go up and then come back down. to go up
Yeah.
again and never break out and come back down. That is frustrating, especially when it's over a 6-month duration. You can only
Okay.
window address so long.
Okay. Interesting. And that, we came to the end of the quarter and there's still window dressing. So parabolic moves. I guess the key is, Tom, just like a rubber band, you never know how far it could stretch before it snaps.
Yeah, no, for sure.
And are you interested in having people follow you that see this interview and are interested in your work? And what would be the best way for them to do
Yeah,
so?
so I mean, I would certainly appreciate if the way I speak or the thought behind the way I look at some of these charts is interesting. You can find me at 2 places. You'll find me at Twitter, which is or X, sorry. Well, that'll be at Tom the Trader 1 is the
Right.
handle. And then I also write a weekly note. So every Sunday, usually around maybe around 11 o'clock Eastern Standard Time, I publish a weekly note that just provides a perspective on the S&P 500 and any ideas that I'm watching. And that is at linesonachart.substack.com.
Yeah, I love your description of yourself. What do you do? I draw lines on a chart.
It's pretty
People ask
simple. I
me-
try to find out which way they're going.
Yeah, I get paid to talk. So anyway, Tom, you know what happens after you get through an interview with me?
I haven't figured that part out yet.
All right, you're now you're my newest trading warrior, brother.
Perfect.
All right, so I'm glad that our paths crossed, and hope you have a great summer trading season. Appreciate you spending your most valuable currency, which you'll see gets more and more valuable as time passes. That's time. So appreciate you spending 30 minutes with us and sharing your story. And I recommend that people follow Tom. And it's not the quantity of tweets, it's the quality of tweets, in my view. So great having a conversation, Tom.
Super. Thanks so much for your time again, Dale, and for the invite to share some time and space together to talk charts. It's always fun.
Good hunting, my trading warrior brother.
Cheers.
So follow Tom at Tom the Trader 1 and check out his Substack. That's a wrap, everybody. Metal's getting killed. Market's still ramping a little bit. Apple almost at new highs, and greed is running rampant right now. So let's see if they're taught a lesson again, like they always have been eventually throughout market history. Thank you so much, Tom.
Thank you.
Have a great weekend.